is a lot of times people buy on the basis the stock has gone down this much. How much further can it go down? Kaiser Industries had gone from $26 a share to 16. I said, how much lower can it go? It's 16. So I think we bought one of the biggest blocks ever on the American Stock Exchange of Kaiser Industries at 14. I said, it's gone from 26 to 16. How much lower can it go? Well, at 10, I called my mother and said, Mom, you got to look at this Kaiser Industries. How much lower can it go? It's gone from 26 to 10. Well, it went to 6, it went to 5, it went to 4, it went to 3.
Peter Lynch gave a talk a long time ago, and he was basically talking about stocks going down and people thinking that, well, lower cannot go lower. It's always darkest before pitch black. And, well, this stock is down 50%. How much lower can it go? And, well, Fubo TV might be the perfect example of that, right? In the last 3 years, the stock is down close to 95%. But, of course, to reach this milestone, the stock had to go down 30%, 40%, 50%, 60, 70, 80, 90, 94%. So I'm sure plenty of folks, and okay, maybe you like the company, maybe you thought and you trusted management, fine. But how many times do you think people said, oh, how much lower can it go? It's already down so much, how much lower can it go? Well, usually when things don't go a company's way, it will eventually go down lower until it reaches a point where it cannot go down lower because either the company is bankrupt, somebody acquired the company, or it has been delisted. Now, with regards to Fubo specifically, maybe this company might be on a path of recovery. I'm not talking about the stock right now. Of course, if the company does manage to turn it around, then the stock will eventually follow, right? In the short term, the stock can be broken, but a company can go and do great things. So let's discuss Fubo in this video. Fubo is a company with a market cap of $507.8 million. And as you can see, the performance year to date down 52%, year over year down 37%, and in the last 3 months, it's up 4.11%. On Friday, the stock was down 12.64% because they reported their latest quarterly figures. Although it was a double beat for the quarter, guidance was not as good as expected. So let's talk about Fubo. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We'll really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to full.com/couchinvestor. Thank you very much. Now, Fubo is a company that right now, analysts expect it to grow 18.5%. The company is expected to grow 19% for fiscal 2024, still being unprofitable. In fiscal 2025, still being unprofitable, growing sales by 11.41%. Then in fiscal 2026, that's when the company is supposed to turn profitable and grow revenue by 15.36% year over year. Right now, the average analyst price target is close to 60% higher than the price we're at today. There are 9 analysts covering this company, 5 with a hold rating, 2 with a buy, 1 with a strong buy, and 1 with a strong sell. The highest price target sits at $3. Now, since there are no earnings, no free cash flow as of yet, the only pricing metrics that we can look at is price to sales. And yeah, previously in the booming pandemic market, well, price to sales here was extremely high, and now it's at 0.3 times next 12 months sales. The mean here sits at 2.1 times. Of course, that's because, well, previously we were closer to 10 times. Now, 0.3 times is definitely not expensive. But then again, just because it's not expensive does not automatically make it a good investment, because eventually Fubo does compete with, well, all the other streaming players, all the other traditional players as well. Plus, since it's very sports centric, it's not cheap to get those sport streaming rights. Now let's zoom out a little bit and see what Fubo, the company, has done in the last couple of years, revenue wise, what's expected from it in the next coming fiscal years. Now, as you can see, for fiscal 25 and 2026, it's expected to be free cash flow positive. Fiscal 25, $30 million, fiscal 2026, $112.8 million. If that happens, that's a big positive. Switching to the revenue sources. So one comes from subscription revenue, that's the majority, and then the other from advertising revenue. Now, since Q1 2021, subscription revenue has grown by 402%, and advertising revenue by 219.3%, although more recently that has been flat-ish for the last couple of quarters. Revenue from subscription continues to go up. If we look at the so-called profitability profile of this company, net income, of course, still negative, but as you can see, it is trending up. This is in the last 12 months, so the trajectory is the correct one. Total revenue, as we've seen, goes up, and then you've got here gross profit margin. Well, it is also trending upwards. So what has happened in the last quarter? So revenue increased 20.3%. Yes, the growth rates are lower than before, but that's also because, well, Q3 2023 was a pretty strong quarter. Operating expenses only increased 10% year over year, but they are also higher than Q2. Net loss did improve by quite a lot year over year. Adjusted EBITDA, same thing here, good improvements. And then free cash flow, very, very close to being break even for the quarter. So definitely trending in the right direction. Now, with regards to North America, their main market, and rest of the world, this is basically the picture. So subscribers grew by 9.2% year over year. Again, you can clearly see that the growth rate here is decelerating quite fast, what was quite low in Q3. Revenue for North America increased 20.7%. Again, because Q3 2023 was a pretty good quarter. ARPU did increase year over year and was flat to down a little bit quarter over quarter. As for rest of the world, that's a segment that doesn't get monetized as well. We've known that from looking at other companies. So here ARPU is at $7.50. It's up year over year and quarter over quarter as well. But subscribers did drop 8.1% year over year and also down quarter over quarter. Revenue there is up 6% year over year. As for some comments that were made, so advertising revenue in North America declined 11% year over year due to a tough comparison in Q3 2023 and adjustments to fubo's content portfolio. Fubo is encouraged by a record upfront season and plans to add new interactive ads offering in Q4. They say that a shift to virtual MVPDs is necessary to offset the decline of traditional pay TV and will enable media companies to grow their revenue and profits. They won a preliminary injunction against the sports streaming joint venture from Disney, Fox, and Warner Bros. Discovery. The antitrust lawsuit is going to be presented at a trial scheduled for October 2025. And this is basically the big threat here, because if they do not win this lawsuit, then this competing product is probably going to destroy Fubo, because they'll be able to offer better services, better prices, because, well, look at the names of those companies. But if somehow Fubo does win or they reach a compromise, then that's definitely going to be bullish for the company. But like I wrote here, the antitrust lawsuit is presented at trial scheduled for October 2025. So yeah, 11 months from today. The company continues to focus on delivering a high-quality, innovative streaming experience for users, including investments in products and technology. Fubo continues to execute on its super aggregation strategy, offering multiple subscription options and free ad-supported content, and they also partnered up with The Athletic to drive audience growth. As for Q4 revenue guidance and fiscal year 2024 guidance, revenue for fiscal year 2024 was a bit below what was expected, still expected to grow 19%, but the number here at the midpoint is a bit below the consensus numbers. As for subscribers, they expect close to 1.7 million subscribers, and that's for North America. As for the rest of the world, they expect subscribers to reach 345 to 355,000 subscribers. Revenue for Q4 between $7.9 and $8.9 million, and for the full year between $33 to $35 million. Now, last thing here, looking at the graph, it does seem like the stock is making higher lows. So we've got one low here back in March 2023, the other one right here, June 2024. And now, by the way, this is on the daily, not the weekly. And it does seem that maybe here, September 2024, $1.37 might be a higher low. Although right now, after the earnings report, we again did not manage to stay above the 200-day moving average. That has been a problem for the last couple of times here. Once back here, August 2024, then we've got September 2024, and now we've got, well, the end of October, beginning of November, and of course, the last year earnings report took the stock and that red candle all the way down under the 50 and the 20-day moving average. So yeah, it's a bit in no man's land unless we see a quick recovery on Monday. Of course, there is election on Tuesday, so the markets are a bit in an uncertain environment right now, so expect some volatility. But yeah, you would like to see a quick recovery above those moving averages here. Overall, I think buying fubo today, $1.5 per share, $500 million in market cap, is betting on the fact that this company is going to win the lawsuit against the big guys or reach a settlement that would make them a so-called winner. Because if that does not happen, then what's the point, right? Then what's the point? They will just run out of money and they'll have to dilute you even more. Then eventually also from a consumer perspective, right? From a subscriber, why would I sign up to fubo when I have the other option available to me, right? Just doesn't make much sense. So right now I would say it's a bet. It's a bet on them winning that lawsuit. Is the bet worth taking? I personally don't think so. I think there are plenty of other better options in the market, but that's just my sentiment. If you disagree, let me know down in the comment section below. Try and make your case. We really appreciate that. Like, subscribe to all of that, and I'll see you all in the next one. Bye-bye.